CME, the world's largest futures exchange, launched its own Bitcoin futures contract Sunday under the ticker BTC. The futures fell 3.8% to $18,760 about 4 hours after opening at $20,650 and rising slightly. The move lower was a stark contrast from the 19% surge in CBOE Bitcoin futures during their first day of trading a week ago. The CBOE Bitcoin futures, traded under the ticker XBT, rose 3% to $18,660 Sunday evening, ET. Because of the initial gains in the CBOE Bitcoin futures, I think today people were anticipating a similar type of event, said Joe Van Hack, founder and managing partner at Chicago-based trading firm Grace Hall. The aggressiveness of the bids did take me by surprise. Van Hack, who said he was one of the first to trade both the CBOE and CME Bitcoin futures, noted that it appears more institutional-level investors are trading the CME contract. A key difference between the CBOE and CME futures is that the CBOE contract represents 1 Bitcoin, while a CME contract represents 5 Bitcoins. The CBOE also settles its futures against a daily price auction from Gemini, while the CME uses its own Bitcoin reference rate, which tracks several cryptocurrency exchanges. To monitor both types of Bitcoin futures on CNBC.com, type Bitcoin futures into the ticker search box at the top of the page. Bitcoin itself fell about 4% at $18,334, according to the CoinDesk Bitcoin Price Index. CoinDesk tracks prices from digital currency exchanges Bitstamp, Coinbase, Itbit and Bitfinex. Bobby Cho, head trader at major Bitcoin trading company Cumberland, a subsidiary of DRW, pointed out that the CME futures were trading closer to the actual price of Bitcoin than the CBOE contract had at launch last Sunday. There's more people who are involved in the CME launch than there were at CBOE's, Cho said. The spot market still dictates where futures are trading, just because of the sheer volume. Leading U.S. exchanges have raced to offer derivatives contracts for Bitcoin, which has surged more than 1,600% this year on growing investor interest. CME had made its announcement on December 1 for Bitcoin futures. But 2 days later CBOE Global Markets said it was launching its own futures contract on December 10, a week before CME. Nasdaq and Cantor Fitzgerald are also planning their own Bitcoin derivatives contracts. CBOE's Bitcoin futures contract had a relatively smooth first week of trading, although volume was on the light side. The most popular contract, which expires in January, nedged 17.1% in the first week of trading to settle Friday at $18,105. About 20 firms participated, including Interactive Brokers and Wedbush Futures. TD Ameritrade announced late Friday afternoon it would allow certain clients to begin trading the CBOE Bitcoin futures but not the CME futures, on Monday. They've gone about the launch of these products with their guard up a bit, Van Hack said. I can obviously see how somebody could game the system with a bit of capital. Many see the launch of Bitcoin futures as a step towards establishing the digital currency as a legitimate class. The derivatives allow institutional investors to buy into the cryptocurrency trend and could pave the way for a Bitcoin exchange-traded fund. In less than 10 years, Bitcoin has quickly evolved from being a fringe and the focus of tech nerds to a globally trade day. More than 170 crypto funds have launched to invest in cryptocurrencies and startups focused on the blockchain technology behind the digital currencies, according to financial research firm Autonomous Next. CNBC's Rebecca Ungarino contributed to this report.